Good evening, everyone. Today is Tuesday, April the 18th. My name is Anne-Marie Band, and this is the Leeloo Level Up Midweek Report for Wednesday and the days ahead. So we're going to take a look at the futures tonight, not going to look at the regular stocks. We'll do that on another day. This week, we want to take a look at the futures. Today, we had housing starts. In the pre-market, we really ran up, but as soon as the day started, we started to leak. We came down into the support floor right around that 41.65 to 41.68 level. We really started building some pressure, and that's what the market ended up giving us. Now, what we did was we closed above the close of the prior day, but not above its high. And so we're sitting in the same type of formation. Notice the day before that, we closed above the close of the prior high, the prior close, but we did not close above that prior high. So finally, the price action is trying to battle this particular edge at 41.77 to 41.80. We again climbed into it close to the close of the day and then faded. So tomorrow, what we've got is the EIA petroleum report. If oil starts heating up, it's really going to put a damper on the market. We're also going to look at the dollar in general to see how that looks. We've got the beige book, but then a couple of Fed speakers who always end up, making the market go crazy. Luckily, that's after the close tomorrow. So tomorrow, not going to be too much, but Wednesday, we've got jobless claims, Philly Fed, existing home sales, and leading indicator consensus. So we've got a couple of newsy days. What's really happening this week is approximately almost 20% of the entire S&P is going to report this week. Netflix reported after the close. I believe it faded and then recovered, is now sitting positive in the aftermarket. So what does this give us? Well, it gives us more of the same. Tomorrow, we are very likely to see range expansion and then a fade into the area. My suspicion is that the price action is exhausting up here, right? We've got thin profile to the edge that looks like stop running, and then we come back down and fill in this volume profile. So it's pretty fat around here. Here's the storyboard. In the overnight, if we get above 41.80, price action is going to run potentially into 41.90. And then after that, potentially 42.06-ish, sitting around those zones. But there's not a ton of heat pushing price action higher. So I do suspect that tomorrow we end up having a day much like today, where we exhaust up ahead and then we sort of flesh out these lower regions. My suspicion is that we still come into that 41.50 area. I think the market's really ahead of itself right now, and I do believe it's ahead of itself because a lot of people see the writing on the wall. They know that we've got a pullback coming, but at the same time, they're getting in front of the move that they think is coming on the pullback, and when the pullback doesn't come, they have to buy to cover. So it becomes a very complex set of trading back and forth. That's really what we're seeing in general. Let's go to the NQ. Okay, so for the NQ, as the profile builds, what we are seeing is the same sort of very trapped sideways. Look at how much short covering this is. It just ran up the chain. Everybody said, holy cow, I got to get out of there. And then most of the day sitting right in this tight zone. So what do we want to look for? Well, if you are of the ilk that thinks the market is going to rise, you're going to stare down this number that I've been talking about forever, 13,205, 210. Once it gets above there, we could have ourselves another short covering event that'll go right into 13,260. And we had this number up here that we did not test, and that's 13,300. But again, my suspicion is anything that moves up like this is just an exhaustion event, and it's moving up as people leave the market. And so that brings us into the volume pocket that allows us to look at price action that looks fairly sideways. Today on InvestaQuant Stats from the Place Your Trades website, they said, hey, listen, we're probably not going to be able to close near the open today. It just is what it is. And so that ended up being a really nice positioning heads up for price action to the south, and then this chop that holds. But on the flip side, notice low, higher low, higher low, higher low. It's all coming into these higher low regions, and that still tells us that buyers are sitting defending the lines underneath. So line in the sand, really low, 13,078, and then 13,113. I suspect we're going to have price action actually give us this 13,130 area. I actually think that's going to happen. And so we're going to sit in this sideways pocket. The market is really not expanding. It's just moving through a range. Excuse me. As we take a look at the YM, P.S. by the way, please remember to listen to this at 1.25 or even 1.5. I am a little slow in terms of the whatever of my speech. There I go. Notice today we have the number 34,166 pushing up, and it came right into the prior high of the prior month. And this is a very key thing that occurred, because as soon as we did it, we pulled right back into the range, folks. And so fading down into the deep support, I had 33,950. It lost that level, but what you do is you let it lose the level. Once it recaptures it, then you try to buy moving forward. And that's really what we're seeing. We're caught between 33,950 and 34,250 in general. Okay, and those are the levels to watch. Sideways motion, it's got a lot of exhaustion sitting there. Nothing in the overnight markets get put here, but as soon as we opened up, we just faded, and once we got to support, we started buying back up. And since we've got all these higher lows, that's still the trend. So if you want to go short, let it slip below this 34,000 area, bounce, give you a lower high, and then pull down into support. Just be very mechanical about trading right now, because the days are difficult. Okay, here we are with the RTY. The RTY, we know, are the small caps, and the small caps will likely suffer more if we do have things coming apart at the seams, as a lot of people seem to think there are. And so today, our level did trigger, moving up above it, and then notice pre-market action up here, opens here, and then fades all the way down to our 1795 area. These levels have been golden, folks. Wait for it to drop there. As soon as it gets there, start looking for price action to hold. just start looking for it to hold. Once it begins to bounce, let the pullback bring you in and then take the trade. Your risk is going to be low, and then you just sit on your hands and wait for it to move to the north. Levels above 1817 and then 1827. Levels below 1795. I feel fairly certain that things will hold that way, but if they don't, 1788 coming back with old resistance and potentially new support. Let's look at gold. A lot of people thinking gold is overdone right now, and I really am in that camp. But what's happening on the fades is that they are holding. So yesterday's fade came into 1992. It missed my 1990. So I'm going to say, hey, listen, they're buying it up there. I'm going to move it to that 1993-ish area, see if that makes a difference. Also, that 1996 pullbacks are buy zones here, but look at what's happening. We've got this area and then a higher low, a higher high that breaks this ledge right here. And to me, that's a signal of weakness. It tells me that the press to the north has a fair likelihood of exhausting in the near term. And so that really is what I want to look for, because I do believe that gold is overheated. And here's the thing, folks. This is a financial instrument. It's not physical gold. It's only going to work for you if the markets are actually behaving well. The moment the markets start behaving badly, this, like every other financial instrument, will not give you the protection that you feel you might deserve by putting it into this instrument. So you want to be very careful and trade it, right? What you want to do in the end is, we buy physical gold or physical silver. Excuse me, folks. We buy physical gold and physical silver in case the world falls apart. But we don't want the world to fall apart. And so, wow, hang on. Sorry, that was a monster coughing fit. We don't want that to happen. So we trade this instrument as the dollar gets weak, but the dollar is at a very big bounce zone, and a lot of people are trading that. I think it might be long in the tooth. Other things can happen. All I'm saying is trade from support to resistance. This chart is no longer in a breakaway pattern because everything's retracing itself. The most important chart that I think we ought to watch at this juncture is oil. And the reason for that is the following. If oil gets heated up, it's going to negatively affect the broad market, because oil is going to be one of those key inputs that sits everywhere, and it's going to have a problem with that move. Now, two things. We could be looking at a space where demand continues to drop. People continue to think that there's a cycle of mild recession or whatever it's coming, and they're going to come into the level and it's finally going to break down. So what are we looking at? Support zones. If this comes into the region around 80, it's a buy zone. And it's been a buy zone for 7 days. Okay? 7 days. It comes in deep. It's going to buy from here. Look at what's been happening, though. High, lower high, lower high, lower high, lower high. If this bounce does not come up above this 8150 tomorrow with the EIA report, we've got a problem sitting in here for going long. If you want to take the long either right after the EIA report, that's perfectly fine, or after the EIA report settles in, also perfectly fine. taking the trade long before the EIA, I don't know that that's a great idea. However, if it wicks down into these lower levels and then begins to flatten and then hold up, you're going to be in good shape for a long, I say wait, and let the traders tell you what they're doing and then just piggyback on the move. All right, that was a little bit long. I actually didn't even want it to be this long, but that's it for the futures that I'm watching. This is the Leeloo Level Up, brought to you by Leeloo Trading, where you can get funded as a futures trader. So go check them out. Thanks so much, and I'll see you all on Thursday.